Welcome to Bullish Bear FX. Please make sure to subscribe and turn the bell so you'll be the first to get notified in our next video.
Good day, traders. Welcome to Bullish Bear FX Academy. Today I'll be teaching us on what a demand and supply zone is, how to draw the demand and supply zone, and how to get in. Very simple, very straightforward. But before we get into the teaching, if you're new to the channel, I would love you to please make sure to hit the subscribe button and turn on the notification bell. That way you can be able to get contents from us. All we do in this channel is just to post contents about the financial market that will enable the trader to be profitable for in a long term. Be it synthetic market, be it the financial market, be it the crypto the crypto market, mention any of them. Our duty is to make sure we create contents that are going to be that can enable each trader to be very profitable. So what's the demand and the supply zone? To me, a demand and a supply zone are basically zones where smart money or the big institutions bought from previously or sold from previously. That is where the major move we're looking for, the volatility, came from. And what we call the higher highs and the higher lows, what we call structure in the financial market, is as a result of this move created and caused by smart money. We're just going to go into that and make it as quick as possible. So in this particular chart now, I'm going to be showing us how to identify the demand and supply zones. We know this market is a bullish market. Looking from here, this is a bullish market, and mind you, this is in our 4-time frame. This is how I trade. I prefer making use of the bigger time frame and trade with respect to the bigger time frames, because it gives you peace of mind and then it gives you more money when you write. Right? So for instance, in this zone, we know that this is what we call a high, this is what we call a higher high, and here we call a higher low, and this is what we call a higher low. So how do we now identify? How do we look at the zone and know that this zone is actually a demand zone or a supply zone? Let's go with the demand zone first. So if you to take a look at here, this is what we call the higher low, and this was the higher high. The first question you have to ask yourself is the move that broke structure. This is our last high. You can see that this is our last high. This was our last high. The move that broke the last high, where did it begin from? Where did that move start from? Once you are able to identify where that move started from, that's the easiest way to identify a demand or a supply zone. And when you have discovered where the move starts from, the next thing to identify is the last bearish candle in respect to a demand zone is the last bearish candle before the move. Now, in this case, we can see this red candle here. You can see this red candle here. Obviously, we can see that. So this was the red candle before the move that broke this high. So once we've been able to identify these two important checklists, the next thing to do is to make our entries. Now, how do we enter? First, before you make entries and enter into a market, you have to mark it out. It's very important. I think this is one of the important aspects. You have to mark them out. And once we've discovered the last red candle before the move began, we now have to make our entries using the 50% of the candle or the 62% of the candle or 68% of the candle. Majority of the times I make use of the 50 and 38. In some case scenarios I tend to make use of the opening of the candle, but it's best to use the 50% of the candle. It will keep you at rest. And then this strategy is a very calculated strategy, that your stop loss is already calculated, your entries are already calculated. You don't need to stress yourself on anything. You're not trading based on confusion. You know what to look out for. Now, once you've identified the last red candle before the move started, target the 50% of the candle. In this case scenario, market tapped up to 68, up to close to 80% of the candle. It doesn't matter. But as long as you've gotten the 50% and the stop loss is just below this last high, you are good to go. So as you can see here, markets tapped into it, and what happened? We had a move upward to create a new high. Now let's move our box up. So this was the new high the market created. So after markets, okay, this was last high, previous high market created, when tapped into our demand zone, and what happened? It continued upwards. It rallied back upwards to this zone. Okay, you can see that for yourself. It rallied back up to this to create this zone. So where did the move that broke this zone start from? Obviously, someone will answer that the move started from here. But did you notice that when the move started from here, when it got to this place, we had a little breakdown? These are things you have to note down. If the move is not, you have to identify the move that broke this high. Where did it start from? I'm not talking about the beginning. I'm talking about where it began from after the whole dance, after the whole consolidation. Where did the move start from? In this case scenario, yes, the move started from here. It moved all the way up here, but you can see these two candles. We call them consolidated candles. They were dancing at this zone. Market was just playing around. It was not moving. There was low volatility in the market. So the move that broke this structure started from this zone. You can see this candle, this bullish candle. Can you see how it moved and broke structure? I'm not going to be looking for entries down here. I'll be looking for entries where that move that broke the structure after the whole consolidation, the whole consolidation in the market happened. And in this case, no, it was here. So what was the last candle before this bullish candle? We can see this green candle. And we can notice that this green candle is a doji candle. It doesn't have a body. So what am I going to target? I'm going to make my entries at that candle, that's the small candle, doji candle, or the 50% of this whole week. And you can see that was exactly where market. And then my stop loss is not going to be lower here, not going to be here. My stop loss is going to be here, this zone. You see this zone? That's where my stop loss is going to be. Get? And then in this case scenario this is a different case scenario. Then what happened again? Market came and did what? It broke out from this zone. Okay? So after market tapped into our supply demand zone here, what happened? It moved up, and then you can see again, this was the bullish candle we needed. Market danced around here. This one candle here, it was a red candle that came in between this bullish candle. So the move did not start from here. The move actually started from here. Okay, and it broke out from this structure, from this last high. Once it broke out from this last high, what happened? It went all the way up. So where are we going to be looking for entries? We're going to be looking for entries at this zone. You see this red candle at this zone. We're not going to be looking for entries here. I know sometimes in some case scenario, market might tend to come and reverse from here, but it's not reliable majority of the times. And especially when you start seeing markets creating lower lows and lower highs just to come and tap into a demand or supply zone, you have to pay attention to all these things. So markets came and tapped into this zoom zone. This you can see for yourself. And what happened? It's rallied all the way up again. Now, in this case scenario, you can see for yourself at this zone. Let's take this high. You can see from here. You can see for yourself. We obviously have a new high. This is our new high. Okay, and this was the move where the move started from. Can you notice that the move from here to here was smooth? Can you see it? And that was the major reason why price had to come all the way down to tap into this zone. This is our confirmed demand zone. This is our confirmed demand zone. Alright, this is our confirmed demand zone. It's very simple and straightforward. Okay, it's very simple and straightforward. Demand and supply zones are areas where smart money, the major volatility of the market, started from, where smart money bought from, and majority of times it leaves gaps all the way upwards. Now, how do I identify them? How I identify them is to look for zones where markets reverse from, zones where market bought impulsively from. These zones to break the last high. A demand zone is termed solid or very verified when, first of all, it breaks structure. When we have a BOS, a break of structure, which means a break of this structure. And then second, that's the major criteria. If the move does not break this structure, then that zone is not a demand zone or a supply zone. So it has to break structure. That's the very first zone. It has to break structure. Once it has broken structure, then you can now begin to look for whether the move that broke the structure was smooth, or there was some areas it played around. In this case scenario here was smooth, and in this case scenario we had some dance around here. So the move was from here. Okay, the move was from here. So it's a very simple and straightforward strategy. So I hope we got something from this video. Wish us best good luck and best wishes in our trading.